Hey everybody, it's Michael Martin. I hope you're doing well. Thanks for being here. If you don't know me, I'm a Los Angeles-based futures, stocks, and options trader dealing with the time zone changes. I got a great email from someone. It's a long email. I'll paraphrase it about how do you stay in emotional control during the day, especially when you're trading all these instruments. It's a paraphrase, but that's the gist of it. So I know where I'm getting in and where I'm getting out before I even put the trade on. I also know the expected value of a trade for the types and the style of trading that I do. And I also know where I feel emotionally about the way I win, how much I win, when I win. So I'm very, very placated, and I'm at a place of like stasis before I even engage with the markets. I have known from a 30,000 foot view that the market is all powerful and all knowing, omnipotent and omniscient. And I don't want to ever take on the market by thinking that I know more. I know a lot. I've been around the block. I've got a lot of trading experience, but at the end of the day, there's always something that could go on in the marketplace that could come and hurt you very, very badly if you try to second guess of why something's going to happen. Give you an example. You might have strong opinions about, AI stocks and where that's all going to go. And you might have several reasons why you think that those markets are bullish right now. You very well could be right. But you have limited experience. Unless you have a CFA, which most of you don't, there's still very limited understanding of what it is that's going on in the marketplace. Most of the information that you're going to get about the fundamentals are going to be written by hype, right? These are hype stories. So I can't trust any of the stuff that's written by fanboys about how things are going to change the world or this and that. Maybe it will, maybe it won't. I remember the BlackBerry, which was my favorite smartphone, kind of came and went, right? Even Jim Cramer had it as its four horsemen. They say, oh, AI is going to change the world, and in the future, all this stuff is going to happen. It'll probably be close to what happens, but it never really goes the way you think. And then there's always something else. I myself crave human interaction. The point being is that for all the reasons why you think there's a bullish story, there might be even more, as well as there might be as many reasons why we're at the top of the market. As other traders, especially, disciples of Bill O'Neill, you could read his books. They talk about there's an 80% chance that the stock could get hit in half at some point of the stock's lifespan. So even in big blue chip names, if you go back and look at Dow components, and of course they'll be adjusted for splits, but you can see that there's been some gigantic pullbacks. Eventually quality wins out. But if you're a trader, you need to know how to avoid losing money, right? And that can happen from not putting on trades in the first place and or using protective stops. So my whole approach to the marketplace is like trying to catch a wave, like a surfer would. I'm not a surfer myself, not as long as sharks can attack you in ankle deep water. No, thank you. And that Santa Monica Bay is basically a nursery for juvenile great whites. I'll sit and watch. You surf, I'll watch. So when you have your position sizing, you can adjust by volatility. So you know the quantity of shares or contracts in options or futures that will constitute your risk unit. You know where your entry is if you're going to buy a breakout or something like that. Automatically, you know where your protective stop is, right? So that whole aspect of your trading is done before you even put the trade on. What is there to be emotionally, upset about? If you've done the trade enough and or if you've simulated using an engine, you also know the accuracy rate. You know how frequently that trade's going to win. So knowing all that stuff, people are famous for saying, I've read Marcus Aurelius and all the stoicism. Well, that's great, but now's your time to practice it. If you know that only, 1 out of 3 times you're going to make money, right? And you know how much that is, that amount of money is quantified, then any given trade should be equal. Right? Any trade that you do on a Monday, a Tuesday, Wednesday, Thursday, Friday, as long as you're trading that same setup over and over and over again, what is there to get emotionally involved in then? Other than you loving the discipline of the fact that you can put on those trades every time you get the signal. You should be thinking about being addicted to your system, not to any one trade. And I don't even mean to say addiction, but that's, what I'm saying, the diligence, right? The intentional activity of being able to pull off those trades day after day after day. That's what you celebrate is your discipline, which you need to have a really good attitude to do. So I don't look at any one trade as a make or break kind of a deal. And if I do look at it any one particular way, now that I think about it, it's break. Because all you need is one really, really bad trade to destabilize you and wipe you out of a significant part of your equity. So protecting your capital and playing job number one. Again, I wrote about these things where I was in limit moves. It's all in the Inner Voice of Trading. You can get the audiobook version for free. The link is in the description of what did I need to do to thicken my skin around this stuff. I just know that, people say you win some, you lose some. That's kind of my approach to the markets now. It's easy for me to say, but it still doesn't mean that winning trades can't reverse and break me even, or that trades that I put on that are exact same setups that I've been doing 6 months ago don't reverse and knock me out for small losses. Win or lose, everyone gets what they want, as it said, but I don't want that emotional upheaval about making or losing money. The best that I can do is follow my rules, right? Because, win or lose, everyone gets what they want out of any situation, right? That's wisdom for not just, trading. It's true for life. So I don't tend to be a drama queen about those types of things. I just do my thing, put my trade on, and sometimes you win, sometimes you lose. I think for newer traders, you're looking for validation. You want to know that you can do this. You want to be a winning trader, and you kind of know deep in your heart how you say that. So that is one way to kind of stay grounded, is to have a strong idea of what the possibilities are before you even start. Furthermore, this is why you don't need 10 monitors. You might need 2, has proven to show an increase in productivity, but there's really nothing you can learn by watching 1-minute bars. I know there's professional prop traders, but it's different audience, right? I'm not speaking to those people. I'm speaking to the person who's doing it by themselves at home trying to figure it out. Trying to make decisions on the fly is the worst thing that you can do. If you watch the moves go by in any number of bars, you're going to be induced to take action because of your emotions. For me, I know what the best case and worst case scenarios are. I also have a plan to adjust my stops if the markets are moving in my favor. If they move against me, I never readjust. I do a lot of testing on Bayesian statistics. If I know, if I'm risking 10 cents in a particular contract, call it corn, I'm not in the trade, but say that you have a trade on and I'm risking 10 cents, and it goes down, and I observe that, say, 60% of the time, when I lose money, obviously the thing's gone down. It has to have been down 7 cents before it gets to be down 10, right? Otherwise, it wouldn't make sense. It can't be possible. So my 10-cent loser has to have been down 7 cents. So I can go back and look at all my trades and say, when did I have an opportunity to take action when it was down 7, knowing that there might be a 60% probability that it continues to weaken? Can I improve my exits by using, conditional probabilities? What's the probability of event B given the known probability of event A? So that's stuff that you can improve your exits on if you want to preserve your capital. But for the most part, I know that, you're going to win some, you're going to lose some. And if I lose some, I know exactly what that quantity is as a percentage of my cash. So that's why I'm able to put on a trade, get my fill, enter in my protective stop, and then that's it. There's nothing else to do. Watching it's not going to help you. It might make you feel good, but I don't want to be entertained by 1-minute bars. I've got better things to do. So this has taken a while to get to. I was born with a good intuition and a strong inner voice, but I don't sit and watch the machines tick away. It doesn't excite me. It's just money, and it gives me a great calm, peace of mind when I trade that way. You can set alerts so that if you're risking 10 cents in corn and it goes up 10 cents above your entry price, now you can set an alert that'll go back to your machine. You can cancel your protective stop where it was 10 cents below your entry and now raise your protective stop to break even. So that you can do as well. But ultimately, the point of developing a process is to try to get you out of the equation. Focus on the math, right? Because you're the weakest link in your trading. There's more videos like this right here.